Just not the big four. I guess the entire
pretty much all of
pretty much the entire cabinet allocation
Yeah.
seems to be just endorsing one simple thing: continuity, and there is no compulsion of coalition politics. So what were markets worried about? There you see. It almost looks like a lift from Modi 2.0 to Modi 3.0. So the 2.0 has become 3.0, but in terms of the portfolios, in terms of continuity, and in terms of the fear in the market that if it is ab ki baar mili juli sarkar, will there be a compulsion of coalition politics, and that clearly is not there. So from a market standpoint, if you really have to look at the messaging from the Modi government, number one, like I said, there is no compulsion of coalition politics, which is the policy reform, push towards capex, extension of extension of infrastructure schemes, all that will continue. B, there would be new focus on what the Prime Minister and what the what everyone is talking about. New big themes would be added. Semiconductor. It would be in the area of solar. It would be in the area of energy transition. So there you actually would see extension. So from a market standpoint, it is continuity, no compulsion of coalition politics. The capex and the push towards infra will continue. There would be renewed vigor in what the good work the government has come, and there in a sense would be new themes and new areas which will get created purely because the government has already indicated in their manifesto that how they would be spending and how essentially they are committed to keep the economy strong and how essentially they will continue to spend and build the Viksit Bharat India.
Yeah, absolutely. I think the only two critical posts held by coalition partners is for H.D. Kumaraswamy from JDU, who's now the Heavy Industries and Steel Minister. So from a market perspective, that is something that we're going to be looking out for. And TDP's Ram Mohan Naidu gets the Civil Aviation Ministry. So I think, other than that is something that the market would be okay with. But these are the two critical posts which have been taken up by the coalition partners.
Yeah. So, Aisha, let's understand, and I'm purely addressing the market here. Pre-exit poll, post the election verdict, the concern in the market was, again we are repetitive with this, that what role allies will have, and will they get one of the key portfolios which in a sense will change the whole approach of the Modi government. Could there be could there be compulsions, could there be freebies, could there be a change of gear in terms of the policy what the government has adopted? Looking at the portfolio allocation, it clearly means that BJP has an upper hand. They've managed to, like sabka saath, sabka vikas. They've really, in a sense, managed to keep their allies happy, and there is just no compulsion or no compromise even when it comes to the key portfolios. That's what I would say.
Yep, and from a market standpoint, like you said, that is going to be taken down well. It is going to be fairly welcome. But speaking of the markets, take a look at where we're at. So different from what we witnessed in the week gone by. Yes, of course, at the end of the week, we did see that rally and we flared up. But in yesterday's trading day, it was a quietish day of trade. It was the small cap end of the market that actually led by about 1.5%. But for the frontline index, absolutely flat is where we were. You had names within the IT basket that succumbed to selling pressure. On the flip side, Hero Moto, some of the private banking names, Ultratech Cement, they were the front runners in trade. The FIIs actually were net buyers in the cash market, second straight day, Nikunj, but it was pretty much a quiet trading session.
I will not read too much into yesterday's price action. Frankly, that can be called as isolation. What really matters to us is that let's look at market and how things have moved for the market from the panic low which it made on Tuesday. And from the panic low of Tuesday, what is outperforming? What is underperforming? The small cap index from the panic low is up 6%. However, within that, the composition of the stock clearly seems to be changing. So there is no pattern here, but what is important here is that from the panic low, the stocks which were outperforming are taking a back seat, and different set of leadership clearly seems to be changing. There is no particular theme here, but from the panic day low, I guess the market in a sense is showing very different, very different kind of traction. Similarly, if one really looks at PSU stocks have not come back to their Monday highs or even to their Friday highs. They're way off from the PSUs, from their all-time high. So I see the following happening, which is that markets, from a market standpoint, the entire election cycle is passé now. The fear in terms of what will happen to government reform process, I think that fear has got addressed. There is going to be no change and no tilt in the government policy, and the compulsion of coalition politics is not there. But when you see such a churn and such a large bout of volatility in the market, the leadership changes. So rather than buying PSUs in general, we'll have to use the word selective PSUs. Rather than saying CAPEX as a theme, you'll have to be selective when it comes to CAPEX. Rather than using infrastructure as a category, again, you'll have to be choosy when it comes to the entire theme. So not everything in PSU is going to be doing cartwheels. Similarly, not everything in CAPEX now warrants a buy, and similarly, not everything infrastructure now is a must buy. So that is a difference where you were buying not the company, you were buying the sector. Now it's time to buy the company.
But the SIP data supports and continues to support the market, and for the month of May as well, it's managed to inch up higher. The equity inflows, that is, in particular.
Bravo, I think, is the real word. I mean, bravo or touch wood. When you look at this number, it just is so comforting to see that what the power of retail is. Retail investors were big buyers on the day markets fell. The NSE data has already indicated that they were big buyers to the tune of 21,000 crore on the day markets fell. But additionally, in the run-up to the election, and since we're looking at May data and everybody knew that, June is going to be a swing month, the retail appetite via the SIP route, I think, is firm. It is strong. And more importantly, it is consistent. The fact that the SIP with each passing month is only inching higher, that I think for me is the most comforting sign. And for most of the AUMs, for most of the AMCs now, the SIP AUM is actually in double digit now. So large part of the equity growth is now coming via the SIP route. So I think this is the most comforting aspect, that in the month of May, when everybody knew that the election event would be a swing event, and the SIP collections in a sense did not go lower, it actually went higher. So now we are actually in that phase of the market where foreign institutional investors in a sense are coming back. Domestic institutional investors via the SIP route, they are big buyers, and the retail appetite in individual levels I think is evident, and which I think the markets have already demonstrated. So what do you do now? I think that is most important, that when there is power of liquidity and when there is brute force of local and domestic liquidity so strong, what do you do? My sense is that major part of the short covering rally is over. So if you're chasing the market for any V-shaped rally or any extension in terms of the short covering rally, I think that is over, and that was evident yesterday. There was no compulsion of short covering. FI inflow has started increasing. They are not big sellers now, which means that you are in that phase of the market where nobody wants to sell. And typically when nobody wants to sell and if you want to buy, I guess the market in the near term have potential to outperform. Leadership churn is visible, we spoke about it, and I think private CAPEX stock will continue the dominant theme. The only change what I see is that I think FMCG and defensives, that trade is played out. It was more like a defensive trade. Oh my God, what will happen? And everybody moved money into FMCG stocks. I think that is not going to last. It's expensive space. Private CAPEX stocks will make a comeback. Private banks will make a comeback. But not everything in PSU is looking good to go now.
Okay, so need to be selective there, and perhaps that defensive trade has already played out. All right.
If you like this video, then like, share and subscribe to ET Now.